Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
A very good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is a high-impact weekly live webinar exclusive to Smartkarma Plus subscribers. We discuss the best, highest conviction insights surfaced across the network. Please note that the forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. Every week, we use the forum to surface some of the best ideas across small and large caps, mid caps, as well as core thematics. At the end of the week, we take video recordings of the forum and upload them on our YouTube channel. That allows you to consume them at your own time and pace, as well as share them with friends for feedback. This week, we will explore Shou Yuan, which is China's leading funeral services company. We will then move on to Kingsoft Cloud's impending Hong Kong listing. And finally, we will explore Chinese semiconductor restrictions and how the vice is becoming tighter and tighter. Let's begin by Shou Yuan. The ticker is 1448 Hong Kong. We feel that near term, China's soaring COVID-19 death rate, perhaps, and over the longer term, structural aging population bodes very well for this company. This is covered by 2 to 3 different analysts on the platform. Today, we will explore the case made by healthcare analyst Xin Wang. Key points. Shou Yuan, for those of you who do not know, operates cemeteries and funeral facilities in China. Chris notes that China's recent U-turn on COVID policy is leading to higher mortality rates. This certainly means the demand for funeral services would surge, and that would ironically be positive for this company. But over a more longer term, this is a company that benefits from a lot of structural drivers, including a rapidly aging population. Chris notes that performance is expected to rebound in the second half of 2022 and bodes well for the first half of 2023. Meanwhile, the stock is trading on attractive valuations of just 8 times EBITDA, and the company has also guided towards increasing dividend payout ratios in the future. Secondly, let's take a look at Kingsoft Cloud. The ticker here is KC space US. It's currently listed in the US. However, this is a company that's planning to list in Hong Kong, and this is covered by Shifara Samsudin on the platform. For those of you who are not aware, Kingsoft Cloud is a leading cloud computing company, but their parent also produces software applications. Over the last year or so, competitive pricing strategies resulted in lower gross profit margin compared to competitors. However, it is clear that the company's focus has shifted to supporting profitability, and they've begun raising prices. This company used to trade at rich valuation multiples in the past, but now the valuation multiples are a lot cheaper, signifying further upside. Finally, Hong Kong exchange listing provides an interesting catalyst and an opportunity to invest in a leading Chinese cloud computing company at attractive prices. Finally, in the thematic section today, we will briefly explore the increasing number of restrictions on the Chinese semiconductor sector. This is covered by Vincent Fernando on the platform. Key points to note: Vincent observes that starting May 2019 and leading up to December 2022, there have been a growing number of restrictions on the Chinese semiconductor space, and the restrictions are becoming more and more restrictive as well as expansive. Access to not just US companies' technology, but also to non-US companies' technology has largely been restricted. It is quite likely as such that China's domestic industry will eventually develop solutions, but this could take longer than expected. Recent developments and successive tightening indicates that additional US-driven restrictions are quite likely this year as well. This remains a space that will be tricky and difficult for investors to invest in. If you found today's forum useful, you can continue the conversation with us and our insight providers on Smartkarma. Thank you very much for your time, and we look forward to having you again next week. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.